Taxable or brokerage account is the one that's taxed twice. So this, as an example, you have your savings account, your brokerage accounts, your CDs. After tax going in, taxable as it grows. A little confusing, I'll explain that in a moment. And then taxed at more favorable long-term capital gains rates when you sell in the future. So let me explain that. So brokerage accounts, probably the best example here. After tax contributions going into a brokerage account, meaning it's coming from money that you've presumably already paid taxes on, right? So you sell a house, you sell a business, you got just, some money in checking your savings and you're putting it in there. You've paid taxes on that money, you're putting it into a brokerage account. Taxable along the way. What does that mean? Your interest and your dividends on brokerage accounts are taxed on an annual basis, even if you reinvest them. Big common misconception is, I'm reinvesting my dividends every year, I don't have to pay taxes on it. Not true. In a brokerage account, you have to pay taxes on those dividends and on that interest that you've earned. But then when you take the money out, you're only paying taxes, capital gains taxes, on the gains. So example, you've put in $200,000 in a brokerage account, the account grows to $300,000. You have $100,000 of capital gains. Let's assume that you've held onto it for more than a year, right? So long-term capital gains. The first $200,000 that you pull out, you pay no taxes on. That's called your cost basis. You pay no taxes on the first $200,000 because you've already contributed that in. You've paid taxes on that money. The $100,000 is what you pay long-term capital gains on. We have a separate bracket in our tax code for long-term capital gains, and I'll show a visual in a second how that works. We have a tax bracket for our earned income, and then we have a separate tax bracket for our capital gains income, okay? You are not taxed on the capital gains until you sell. When you take money out of a brokerage account, you could take it out two ways, but when you take it out, the biggest mistake I see people make is if you've got that $300,000, you would think automatically the contributions come out first. Sometimes that's not the case. So if you're doing this on your own, you want to make sure that when you are withdrawing money from a brokerage account, your cost basis or your principal comes out first. You have to actually go in there and elect that. And then your capital gains comes out second.